Revenue was up about 7%. It was a decent beat, about 6% EPS beat. Adjusted EPS was ahead of consensus. Volume was up 11%. Venmo volume accelerated to 14. So operationally, it wasn't really a bad quarter, but the stocks are still down. So how I'd frame it is that this is a decent show me result, but the bigger issue here is around credibility. And I think the market basically wants to see can new leadership really demonstrate some stabilization and execution. So not a blowout quarter, especially given the tough environment, but it was better than what we feared.
Was Wall Street happy, though, with guidance for the current quarter? Because I'm sort of reading some mixed things here on the Bloomberg terminal, and also saw them guide toward a decline in earnings per share in the second quarter.
Yeah, you're right? See, this is what we had flagged in our React as well. I think there is a lot to prove yet. So this was a great quarter, but one data point does not make a trend. We are still yet to see whether branded checkout growth can increase sustainably, ideally grow above low single digits. The second thing is whether transaction margin dollars return to growth after the second quarter dip. So guidance to that is also signaling weakness, it doesn't really inspire confidence in that sense. And thirdly, I think the market also wants to see whether the new CEO can convert this whole $1.5 cost program into product velocity rather than just like some EPS support.
What's the bear case here for PayPal? Fintech is it's an exciting growth segment, but boy, it just feels like competition is everywhere.
You're right, Paul. I think, see, the bear case, investors have heard several turnaround stories before with PayPal, and there is that fatigue setting in. The second quarter guidance does not suggest that the reset is still ongoing. So the bear case is evident, stocks are moving. What I'd argue is that, is there a bull case here? And especially just looking at the valuation and the capital situation with PayPal, they have targeted $6 billion plus of free cash flow this year, and they plan to buy back as much of stock. So that is definitely very interesting for value investors. It's a very cheap, highly profitable company, but I think there is still nervousness around can new management turn it around?
And it really was considered a pioneer, wasn't it, in the payment space? And would you say that it just was too late to sort of change with the times and other companies in that space started to eat its lunch?
I think definitely there are a lot of new players that are coming in, Stripe being one of them, Adyen coming in with the more non-branded kind of offering. So there are lapses, particularly the challenges around the branded business for PayPal. But I wouldn't say the battle is lost, right? Just the scale and the size of this company and the two-sided network, these are very enviable attributes. And I think there's still room for that. One thing I would kind of allude to is the whole job cut situation as well. We've been getting a lot of questions around that.
I'm glad you brought that up because it's an unspecified number of job cuts, right? Or did they say how many they're looking to let go?
So I saw a news line saying 20% job cuts.
Wow.
And PayPal's 24,000 plus employees at the end of last year, and that could mean around 4,500 jobs being culled. And the job cuts technically are a double-edged signal, right? On one hand, they show that management is serious about taking cost and complexity out of the business. But on the other hand, when a company is cutting this deeply, investors tend to ask whether this is just margin repair or whether it actually fixes the growth problem. Basically, PayPal does not need to be smaller just for the sake of being smaller, right? It needs to be faster, more focused, and more competitive at checkout. So that's the question, will they be able to deliver on that?